Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. As we head toward the end of the week and into the new trading week, it's time to take a look at the dollar versus yen from a broader perspective and then drill down into the shorter term to say what that charts are telling us. So sit tight, be aware, be prepared. That's my motto. It should be yours as well. Let's start by taking a look at the daily chart, and if you blur your eyes, well, actually you don't even need to blur your eyes, but you can see that this yellow area right through here, which was the low, or where the low for today's trading came down to and found support buyers, this area has been a level of either support or resistance. Go back to here and here and here. It was resistance, and it became support through here before moving higher. Came back down to this area right through here, found support initially, and then turned back to resistance right through here. It wasn't until the month of March where the price returned back to that level, and then again in the month of May here. And then finally in the month of May, we also moved to the upside. And in trading this month, the market did come down and actually break below that level. But where did we find support? Right near the green and blue lines on this daily chart. They represent the 100 and 200-day moving averages, and the price bounced higher in trading here today. As mentioned, the price came down, tested this low of the swing area after the Bank of Japan interest rate decision and tilt more toward less yield curve control, or expanding the yield curve control idea, and then we saw the price bounce off this level once again. So going forward, guess what? This area remains and will remain a key area, not only next week, but the week going after, and so on and so forth. But as long as the price can remain above this area, then the bias remains a little bit more to the upside. That makes obvious sense. Above the 100 and 200, above this swing area, and stay above those levels is more bullish. Now on the top side, this area right through here is my next key target. It becomes between 142.23 and 142.65. In between sits a 61.8% retracement on the move down from this high to this low on the daily chart. That's a 22 high, 23 low, and this area is also defined by these swing highs right through here. We came up to those levels in the month of June, and then broke through it and used that level as support. In the month of July, we moved below that level. So this area right here near the 142.50 level is going to be a level that, if the buyers can keep pushing to the upside, that getting above that level would be more bullish in the new trading week. Let's next take a look at the hourly chart and see what that is telling us. And as I mentioned, the low price that we saw in trading here today tested a key swing area on the daily chart, and you can see it was also a swing area on the hourly chart through here. Yes, we moved below it briefly in the month of July, but the market quickly reestablished support against this area and pushed the upside. We are back above the 100 and 200 hour moving averages, and this swing area right through here, which comes in between the 140.22 and 140.45 levels. You can see how the market initially have found some support and resistance levels against that level in trading here today. We pushed off of this level to the upside. So staying above the 38.2, let's say at 140.22, and above the 200 and 100 hour moving average keeps the buyers more in control in this currency pair. Where can we go on the top side, or what is the next target on the top side in the short term? Well, let's look at this swing area that, near the 50% retracement level at 141.15-ish area. You go back to here, we found some lows and then resistance, and the market moved to the downside, came back to this level and broke above it, and then found support right through here. Then we found a little resistance right through here, and you can see this is where it goes above and below this 50% retracement level on a number of different occasions here in trading last week and this week. And each of the time the market found a little bit of buying, a little bit of selling, and then it started to rotate back to the downside in trading yesterday after the spike higher before a lot of the key economic data that we saw. Or actually, this was off of the rumors of the yield curve control being loosened in Japan that sent the dollar versus yen to the downside. So getting above this 141.15 level is going to be key going forward into the new trading week. If we're able to get above that level, then we'd look toward our high prices for the current week, which came up into this area, also corresponds with swing levels through here and here. So it's pretty clear from a technical perspective. From a technical perspective, what we're doing in this currency pair, off the daily chart, we have some clearly defined levels that are of importance, and we held support on the downside in that dollar versus yen. On the hourly chart, we also held some support levels and are trading above and below the 100-hour moving average. 50% retracement is still always a key level for me. It remains a key level for the dollar versus yen. That's of the move down from the June high to the July low. That level is going to be a key barometer in trading next week. So there you have it, a look at the detailed look at the dollar versus yen. I hope you learned from it and that you're prepared for your trading next week. My name is Greg Mikulowski. Good fortune with your trading. Bye.